Hello, Patricia.
Hello, John. You smell like coffee?
I've had a couple cups of coffee today. I drink a lot of coffee to keep up with you
Oh, I bet that's
and to
true.
keep up with the real estate market.
That's the truth.
It's moving so fast.
It is moving fast. What's that red thing down there say?
That says end live video. So when we're done today, I'm the brains behind this couple today, and obviously, or I could see better than her. But
He can see better than I can today.
anyway, you're my swim buddy, and you're my sidekick, and you're my
Well, it's
um,
kind of sad that I'm your swim buddy
yeah,
because
you
I
can't
don't know how to
swim.
swim.
Well, I was reading a book and it says everybody needs a swim buddy, and I think that's a euphemism for
Don't you
my
remember when I
sidekick.
tried to drown you
I do remember
in the
that
Mediterranean Sea or wherever it was?
that was in the Caribbean.
Okay,
I think you
whatever.
tried to kill me in the Mediterranean too. But anyway, it's you've had several attempts at it, but so I know you're talking about an important subject today. So
It is a very important subject. We have been doing our my fourth week of the month, Licata Live, has been regarding the buying process. And today, I wanted to talk about what the title or settlement company does.
that's important.
It is important. So,
Or an
excuse
attorney
me,
could do it too.
an attorney can do it as well. Typically, when you make an offer as a buyer, you designate the title company or settlement company or attorney's office that is going to be performing the duties that are necessary to get you to closing. In addition, on that offer, you determine and have accepted by the seller what you are going to be giving as an earnest money deposit. That earnest money deposit is typically held by the settlement company or the attorney that's going to be representing you.
How much is the typical deposit, Pat?
Well, I would say typically you're
Good faith.
looking
It's a
at
good faith
about
deposit.
1%, although if it's a VA loan, often it's a little bit less than that.
So if it's a $500,000 home, it'd be $5,000. If it's $300,000 home, $3,000. $1 million home, $10,000.
Yes. And that is something, as I stated, that you put in your contract when you're making an offer to a seller. And they, of course, like any other term of the contract, can come back to you and try to negotiate that.
What if it's a VA loan
Excuse me.
and it's a 100% loan? Do I still put an EMD?
Yes,
And what happens to that
those
EMD?
two. That earnest money deposit is credited toward your down payment at closing
Or settlement costs?
or settlement costs, yes. So you don't lose it. It is credited back to you at the time of closing.
What if the sale falls apart? Uh, how do I get my deposit back?
That's a really good question.
I'm
It
full of
really,
them. I'm full of good questions.
it depends.
It depends on what.
It depends on several different factors. One is if there is a contingency in your contract whereby you cannot move forward or choose not to move forward with because of the contingency, then your earnest money deposit is refunded to you.
So I have
Typically.
I know I'm hitting you with this stuff. I have a
There we go, guys.
home inspection contingency that gives me 7 days.
Mm-hmm.
But after 11 days, that's the only contingency I have. But after 11 days, I want I want to walk away from this. What happens to that deposit?
Well, what I would suspect would happen, and again, it all depends on the seller. Um, but since you are outside of your contingency period, the seller can refuse to what's the word I'm looking for?
Give the money back.
Sign a release to give you the money back.
I want my money back. How do I get my money back? What are the ways I get my money back?
Either the seller releases it to you, you may have to sue in order to get the money back, or what's the third one?
Settlement.
Is there a third one?
Go to settlement.
Go to settlement. That's correct.
The transaction happens as one way.
Mm-hmm.
We go to settlement.
That's the transaction happening.
All right. So the both parties agree to release it.
Correct.
And there's one other one. What's the other one?
You may have to get an attorney involved
Oh, that's right. And then,
if you're out of all of your.
but I want
contingencies.
my attorney. I want my settlement company to give me the money.
They can't.
Why can't they?
Legally, they can't without a release.
There's only 3 ways in the state of Virginia to get your money back, and the settlement company is not part of the decision-making process. They don't decide the rules.
They do not.
The law.
decide.
They just follow the law.
They facilitate the contract.
They facilitate the con. They gonna
They
follow.
don't really. A settlement company really does not represent any party in the contract. They represent the contract.
They facilitate. They're facilitators.
That is their obligation. So typically what they do for the buyer, and they have different functions for the buyer and the seller. And buyers and sellers do not have to use the same settlement company. My experience is that it is very rare, even if they choose to use the same settlement company, for buyers and sellers to sit together at the closing table. And that is a huge shift from where it had been done probably in the 90s. I started selling real estate in 2010, and even in 2010, buyers and sellers did not sit at the same table together. Typically, what you will hear is the reason for that is because proprietary information may be shared at the table. Social security numbers need to be verified, bank statement or bank account numbers may need to be verified. But I also think that aside from all of that, it's just if there's a contentious situation between the buyer and the seller, things could get really rough and closing just not occur. Or if the buyers and sellers get along too well, then it screws up the settlement or title company or attorney's time frame, because it takes longer than what it really should for settlement to
So
occur.
you said something very important.
What was that?
Now, if the settlement company, there's a buyer side and there's a seller side, and the seller pays their side and the buyer pays their side.
Mm-hmm.
But you say that they don't, even though I'm paying them, they don't work for me. They work for the contract.
Yes,
They follow the contract.
that's their obligation, is to.
But I'm paying them. I want
facilitate.
them to work for me. I want that money back.
Then you need an attorney to represent you. But
And what's the attorney going to look at?
same stuff.
Same stuff.
Same stuff. So typically on the buyer's side, when you have a ratified contract, your agent will forward that contract to whichever settlement company you've designated.
They better send it.
Yes. And when they receive it, they are going to facilitate and work with your lender if you're getting a loan, as well as doing some title work to make sure that you are able to have what's the terminology called? Do you remember?
What's that?
What kind of title? You want clear title?
Clear to close.
No, clear
Title. Make sure that there's no one that owns a piece of that property and is part of the decision making process
right
to come back.
Exactly. And they also look to see if they
Clear title.
to make sure that, as far as they can tell, there was never any fraud from many, many years back. I think, I can't remember how many years back they go. It might be I don't remember. But they go back many, many years.
So what do you buy? Don't you buy something to protect you?
Well, yes.
Even though the settlement company has looked at everything.
They still offer what's called owner's title insurance. Now, if you have a loan, your lender is going to require that you pay for lender's title coverage. And that is just in case, as John mentioned earlier, maybe an heir who came out from under a rock and says, "Oh no, three sales ago, I didn't sign for the home to be sold," and they have a claim against it. This title coverage protects the lender for the amount of money that was borrowed. However, you have the opportunity to purchase owner's title coverage. And owner's title coverage, in my opinion, is kind of like auto insurance that you hope you never use. Although unlike auto insurance, it's a one-time fee that you pay, and that does protect you from crazy situations that could occur in the future with the home based on what happened years prior.
Not even if someone has ownership along the way, but I had one, a personal one, where I certainly made a mistake because eventually it comes back to me. And our HOA, I built a house and it was surveyed. And in our community, you couldn't build a house within so many feet of the property line. And my builder built the house within the property line. And I had a problem. And I called the settlement company and said, "Do I have coverage for this?" And they said, "John, you never bought title insurance." I don't know how that happened because we have properties, but I neglected to buy title insurance.
Just one of the many mistakes he's
It was a
made.
mistake, and it cost me about $1,500-$1,600 to rectify that problem to get it right, with not having to move my house because I couldn't do that. But administratively, so it does a lot of things for you. It's not worth it unless you need it, but when
Correct.
you need it, it's
You need
worth
it.
it.
It is worth it.
And it happens. It happens.
It does. So your lender is required to forward a document to you along the way. It's called a CD, and that lists all of the charges that you should be seeing on your ALTA or settlement statement. So the title company is automatically going to include that owner's title coverage. I can tell you that there are a couple of different levels of owner's title coverage. And of course, the one that's put on there is the one that's going to protect you most, so it's more expensive. So I do believe that you can ask for a less expensive, which isn't going to be as comprehensive of a policy, which will save you some money. But again, it's a one-time charge, and I'm not sure that it's worth doing that. The other benefit to having owner's title coverage, especially in a time like this where interest rates are certainly higher than they've been for many, many years, is that if you're purchasing a home, interest rates may very well get to a point where you want to refinance. If you have owner's title coverage, you can typically get about a 40% discount on title coverage when you refinance. So it's definitely
With the same company, right? With the same company.
yes, it's definitely worth it, I think. How do you feel? Would you recommend it?
Well,
Yes, you would.
yeah,
I'll
I'm
answer
a
that.
clear example of that. If you want to sleep easy at night.
Yeah. Again, it's something that you don't ever want to use, but it's a one-time charge.
And it stays with you forever. It's anywhere from
It does.
$1,000 to $1,500, or
Oh, I wouldn't say that.
depending on the value of the home.
It depends on the value of the home.
Typical home is 450,000, it's going to be,
I wouldn't say that. You don't know what it costs.
typical,
Don't
a
listen to
typical
him.
home. Typical home is.
I know you know what the cost is, but you don't know what the cost for the
Yeah, it's around
owner's
that
title
time. Believe me,
coverage
it's
is.
around 1,000.
Don't listen to him. Ask your settlement company.
Always ask the settlement company.
Um, so what happens is your title company is responsible for the money because if, for example, you are getting a loan, the lender is going to wire your funds to your settlement company or your title company or your attorney.
Doesn't come to us.
Nope, and it
We
doesn't
don't touch the money.
and it doesn't come to the sellers either. So it will go directly there. And if you are paying cash, then you're going to be wiring again to the buyer's settlement company because that's nothing can happen until the settlement company gets the
And
money.
if you're wiring it, they're going to give you a secure way to do it. Don't just send the money to anyone who asks for it.
Yes, wire fraud is real. So please be extra careful with that because scammers have gone to great lengths to circumvent the system.
Before you send any money, you call the recipient and make sure that.
You have the correct information.
Yep.
And what else? So after you close, you get the keys to the house, and then your deed is recorded by the settlement company. And what I can say is that Virginia is what's called a wet settlement state. And that means that the deed has to be recorded at the courthouse before
You get the money.
the sellers get their proceeds from the sale.
You still give them the key though.
Yes.
They get the house at settlement.
Correct.
When it's signed, they get it. You don't wait. The way the Virginia law is at settlement, you give them the key. You don't wait until it's recorded.
That is correct.
But you should keep your insurance on it until it's recorded. That's good practice.
That's for the seller, not for the
Seller,
buyer.
yeah, for
and
the
we're
seller.
talking about
Yep,
buyers here.
yep.
So for the buyer, if you are not getting a loan, you don't have to have homeowners insurance on your property by settlement. Whereas if you're getting a loan, your lender is going to absolutely require that you do. So again, if you're a cash buyer, you still want to get homeowners insurance because God forbid something should happen.
Remember the time you represented the seller, you sold the home, and the next day the buyer's home caught fire?
Yes.
That was terrible.
That was
Wasn't
terrible.
our client, but our seller sold the home. The next day it caught fire and burned.
Yeah, it was horrible, horrible situation. And that's why for the seller, we always advise to keep your homeowner's insurance
Things happen.
active until they actually receive their money. Because you would prefer for the insurance companies to battle out who pays, especially if the deed hasn't been recorded yet. That's kind of a gray area.
Yeah, those insurance companies, they look for ways out.
Most do.
Yeah.
Most do. So I think that's it for me. Do you have anything else you want to add?
Well, you talked about interest rates, so I'll just talk a little bit about. So last week was not a great week for real estate. There was across the nation there were existing home sales in April were down considerably, and higher mortgage rates, thanks in part to Moody's downgrading the U.S. credit rating.
Yeah.
And we think about the debt. 36 million. I heard in the last month it's gone up $1 trillion. I mean, it's just crazy numbers, and it's mad money to us. But let me tell you something. Our interest rates aren't going down. They're being affected by the
Everything.
debt.
By everything.
Everything, the debt. And that debt's going up, it's affecting you. So remember 2.5%, 3% interest rates? It ain't happening. It's not happening. It's only getting worse. It's only getting worse. So the reality of today is where interest rates are. In fact, I saw something, I'll quote it here. Last week for a day or so, it was over 7%. But as of May 22nd, this is from Freddie Mac, the average interest rate was 6.86%. A year ago, May 22nd, 24, it was 6.94. So very, very close.
Very similar.
The previous peak was October of 23. It was 7.79.
Wow.
So it's down, less than a point. But in September of 2024, last September to the end of last year, the low point was 6.08. So it's gone up almost a point, certainly 3/4 of a point in a handful of months, since certainly the first of the year. But so the reality is interest rates are going to be a little bit higher for a while.
Or around 7.
We could yell out as
Between
much as we
6
want,
and
but they're
3/4 and
not
7.
coming down. They're not coming down as quickly as we'd hope.
No.
So that's sort of my market report.
All right, you
That
want to
wasn't
talk
good
about
news.
tickets?
Oh, we we have a season ticket plan with the Fredericksburg Nationals. It's a lot of fun. We've talked
It's a
about that
beautiful
before.
stadium.
Great stadium. Our seats are
We have fabulous
seats. Even on a hot, sunny day, we're
Right.
shaded,
Yeah.
and the hot dogs are good there. We go a couple times a year ourselves. We'll use them, and we have 4 seats, but we'll go early, get a hot dog, watch a few innings,
You get a hot dog.
get some peanuts, and
I sent the shade.
take it in. So the next game we have, and we'll post them, is June 6th. We have 2 in June, June 6th and June 25th.
Is that a Friday? I think it is.
Whatever
Let
June
me
6th
take a
is,
look.
I don't know.
We're going to be in Philadelphia or coming home that day.
Yeah. We're going to Philadelphia, taking our granddaughter to see the history.
It's Friday.
It's Friday. So anyway, if you're interested, you could text me 703-928-5467 right now and line up for those tickets. But either way, you'll hear more about it in another week or so.
Sounds good.
That's about it.
All right.
Thank you.
See you next